What if I told you that there's an investment strategy that could potentially give you more control over your medical career without sacrificing income? Today, I want to share how I went from being a sleep deprived resident who couldn't tell the difference between a traditional and a Roth IRA to discovering node investing, which is a strategy that I believe can help physicians create the flexibility to practice medicine on their own terms. So I kind of remember the very start of my intern year, and we were sitting there in intern orientation, going through a whole bunch of paperwork, benefits, signing up for a retirement plan, all that fun stuff, right? And I remember we got to the part where we had to elect whether we wanted to put our retirement contributions into a Roth or a traditional version of the retirement account. I just remember looking at that thinking, I don't really know what this means. So I remember leaning over to my co-resident and just kind of asking him like, hey, what's the difference? Which one should I pick? And he just said, oh, well, you should pick the Roth. You don't get the tax deduction up front, but then, you're not going to have to pay taxes when you eventually take it out later. I was like, oh, okay, that sounds great. And I really didn't give it any further thought after that. I really didn't understand what I was actually doing with that, right? Like picking asset allocation, picking which fund to put that money into. None of that really made any sense to me. And I didn't really have the time or energy to be thinking about learning any of that at that point. I was too focused on learning to be a doctor, right? At that point, I was focusing on learning neurology, diving in, doing 24-hour call shifts, right? I was sleep deprived. I had a whole lot more on my plate. So it was kind of on the back burner, really kind of an afterthought. And I think that is similar to what I've discussed with many of my colleagues, many other physicians, is that we become very focused on our medical training and that the financial things kind of just fall to the wayside until another time, until the future. So I think I finally got my wake-up call really when the COVID crash happened, right? So when we had that initial severe market volatility, there were the daily sell-offs, the circuit breakers. It was very dramatic, right? And of course, it was all over the news. We were all glued to the TVs at the time, I think, just kind of trying to figure out what really was going on. And so that kept kind of coming up and really brought it to the forefront of my mind. And I started saying, that's kind of interesting. I guess maybe I should learn a little bit more about this because it probably affects me in some way. And I really had, again, at that point, still no real good, strong grasp on what my retirement account was doing. It was invested in some, I think, target date fund. And I would check it periodically, and the numbers were usually going up, and so I was like, okay, that's great. So it was really at that time that I kind of got interested and said, okay, well, this is kind of a big deal. Let me learn something about stock market. What does this actually mean? What does this crash actually mean, right? And then I also kind of started to think at that time too, is like, I need to be planning ahead for the future, right? So medicine's a great career path. There's a lot of job security, stability in the career. But what is my future going to look like? I do have to start thinking ahead a little bit. I was kind of getting more comfortable in my role as a doctor. I was at the end of my training at that point. So I was really becoming, taking the next step to being independent practice. And so kind of made sense to start thinking along those lines a little bit. So at that point, I did start kind of diving in, really just trying to learn as much as I could about stocks, investing in them. How do you pick a good company? How is the value determined for these assets? I also got pretty interested in options trading. I think that was kind of a common thing that a lot of people started getting interested in at that time. I kind of got swept up into that a bit as well. I started, I really dove deep into it. I even picked up this book here, which was way over my head, I would say. There's a ton of calculus in here that I maybe could have understood in my high school calculus class at one point, but now well over my head. But I got really interested in it, and it started to be kind of kind of a hobby, something that I would do in my time when I wasn't studying or, prepping for boards at that point and things like that. Um, but what I really started to realize as I was doing things like option trading, as I was doing some day trading, and I was really dabbling, I think as a lot of people probably were at that time as well, picking up new hobbies during the pandemic, things like that. The volatility really wasn't really for me. I felt like I was always kind of stressed out, wondering, okay, what are my stocks going to do? Are they going to go the way I'm hoping they are? Am I going to see massive fluctuations each day when I log into my portfolio? And for me, that was stressful. I found that, when I was trying to focus on other things, trying to focus on my work, it'd always be kind of in the back of my mind, just kind of stressing me out. And I found that in general, I couldn't sleep that soundly at night whenever I was focusing more just on stocks and options. At that point, I kind of thought, well, I really need to start maybe figuring out what is the right strategy for me, what really suits me. I think there's a place in my portfolio for stocks. Certainly, I don't think I have the right temperament for day trading or swing trading or anything else in that realm. And I think it's good to learn that. And thankfully, I didn't lose tremendous amounts of money. Actually, even made a little bit of money, which was nice. But I think, that was pretty important for me to start taking some of these initial steps and kind of growing a little bit in my financial knowledge, kind of going from basically being financially illiterate to actually starting to learn things and really kind of think about this on a deeper level in a meaningful way. So I think that was a pretty big step for me at that point. So while it was not a great time for many reasons, I do think it was kind of a catalyst for me to really start to take these things a little bit more seriously. So the next kind of, step in the process for me, or kind of evolution of my investing journey, really happened after I graduated residency and was set to move on to my first attending job. And that involved a pretty big move. I was moving out of my area. So I did have a house that I had purchased that I was living in, and my wife also had a home as well. So we actually ended up kind of becoming accidental landlords because we looked at selling them, and at the time it actually kind of didn't make sense. We were only going to break even, or maybe even lose a little bit of money. So for me, it didn't make sense. And actually, it was her that pushed me to hold on to them. And so we did that. We became landlords. We started renting them out, and that's great. So we started learning a whole bunch about real estate investing, started listening to podcasts like Bigger Pockets and a bunch of others. Really started to learn a bunch of different strategies. So that kind of led us down the pathway of purchasing some more investment properties, doing things like the BRRRR strategy. And for a time, there was that period after the start of the COVID pandemic, kind of through 2021, things were really hot in the real estate market, and you could pretty much make any investment property pencil out or work, right? You can make money in most cases, whether you're fixing it up and refinancing it or you're trying to flip it, which, gained a whole ton of popularity, I think, going into that time, and definitely increased in popularity during that time. So that was all wonderful, but then you kind of start to, get out of that honeymoon period a little bit and start to see some of the negative sides of being a landlord, right? So that's where you start to get things break, right? Whether it be a furnace that needed to be replaced, roof that started leaking, air conditioner goes out in the middle of a hot summer. You name it, right? It's always at the most inopportune time when you really least want to spend the money on something. And unfortunately, usually it's never something cheap, right? I mean, sometimes you get away with a couple $100s for a repair, but man, it seems like those big ticket items really like to all kind of go at once or kind of cluster. And that can really hit you pretty hard if you're not prepared for it with a good reserve fund to kind of get you through those periods of time. And thankfully, we did have reserves in place. So these were, hiccups or speed bumps along the way. But Definitely, for me, I was starting to see, okay, well, I moved away from stocks and started getting interested in this world to get rid of some of that volatility. But now I'm starting to get some different headaches, some different concerns, different things keeping me up at night. And personally, I get frustrated, a little bit upset when I had to deal with some of these issues that pop up. My wife handles it probably better than I do. But that's just how it is for me. Everyone's a little bit different, and what types of investments make sense for them. So, realistically, right, when you're already working, full time as a physician, really the last thing you want is to get a call about, plumbing emergency, broken HVAC, whatever it might be, because there's already enough stress and challenges that we're dealing with on a day-to-day basis. So I think then the next phase was, okay, small single family rentals, they're great. They have benefits like, they can appreciate, you can get a lot of tax breaks out of them. That was all nice, but then you're doing that kind of one-on-one individual property management, which has a lot of these hassles and headaches. And we started kind of hearing about and exploring multifamily syndications, which does have a lot of advantages, at least on paper, right? So one benefit is that you have kind of an economy of scale. So there's, when you have more units and you have a dedicated property manager, some of these small things become less of a headache for you as the property owner. And you can get yourself into these bigger properties by kind of partnering up with other people and forming these syndications. So that's all well and good. One thing that I think was a challenge with that is that we did hit a pretty bad market cycle for that. We got pretty interested in it, and I found that this resource here, Michael Blanc's book, was pretty inspirational, and got really invested in this for a while, really interested in doing this in kind of a meaningful way. But I think one of my hangups for it is that, especially unless you are the primary sponsor for a deal, you're putting it together yourself, there's not that much control, realistically. It doesn't feel that much better than being invested in stocks. I mean, you can't log in and look at the value every single day, so there's not that maybe the same stress, but certainly, I've known a lot of people who've been involved in syndications where they either stopped paying dividends or distributions over the last couple of years as the interest rates went really high, and that caught some of these groups off guard. And then there's also been capital calls where they'll actually, get called up by the primary deal sponsors and be asked to put more money into a deal that's struggling. And that's a pretty challenging scenario to be in. And for me personally, that's not really fitting very well with what I'm looking for my investments. I want kind of some steady growth and also a lot of security for the things I'm investing in. So while we were really getting, growth in our single family rental portfolio and also kind of getting immersed in the multifamily space, I continue just kind of immersing myself in different resources, whether it be different books I was reading, podcasts, audiobooks, really just kind of deep diving in my free time whenever I could. I was still really trying to kind of find, okay, what's going to be my niche? What's the right fit for me that kind of fits my investor kind of risk profile and kind of, investor makeup. So far, it seemed like rentals, they were a good fit, but there were some things about it that just, didn't quite suit me personally. So kind of serendipitously, when I was listening to, I think it was a Bigger Pockets podcast, there was an experienced investor on board who was involved in multifamily and talking about some of the struggles that multifamily have been going through. It mentioned that part of their strategy was going to be shifting from actually investing in the properties to investing in the debt on those properties. And I thought that was pretty fascinating because I'd never really thought about investing in debt as being actually something viable, right? I mean, you go out and you use debt, or we use debt on a daily basis, whether you're using your credit card, taking out a loan on your car, or getting a mortgage on your house. So I I was kind of shocked and I was kind of blindsided by that. I was like, wow, okay, that kind of makes sense. And one forum I came across mentioned this book right here, Invest in Debt. Um, and the first time I read this, it really kind of went over my head. I mean, the author here, Jimmy Napier, kind of went into deep dive about buying notes at a discount and all kinds of different strategies you can do, working with borrowers and things like that. And that was kind of an eye-opener for me. There was a whole bunch of terminology I was unfamiliar with, but it did pique my interest. I was like, huh, this is fascinating, and really seemed interesting, especially the concept of just kind of becoming the bank. Um, so that led me to kind of start diving down that rabbit hole, reading about notes, learning as much as I could about them. Eventually, I came across Note School and signed up for one of their trainings, and that's a group led by Eddie Speed, who is a note investor who's been in the space for over 40 years. And eventually I did join on to their group to get more specialized training and really just learn this industry, because as I started to learn more about it, I really started to feel that it kind of checked all the right boxes for me. The risk profile, the time commitment, and just kind of the pros seemed to far outweigh some of the cons that I was seeing with a lot of these other asset classes. So really some of the things I like about notes compared to other real estate classes is, well, number one, it gives me a lot of control. So I can go out and purchase these assets. They vary in price range. You can buy really small notes in the a couple $1,000 range if you want to. Of course, you can get much more expensive notes. They can be several hundred thousands of dollars. So there's a lot of price flexibility in there. But you as an individual investor can go in and buy it yourself, as opposed to say real estate syndications, where unless you have a whole ton of capital, most likely you're pulling your money with other people and you're going to give up some control in that case. So I do like that. The other benefits I found is, of course, you're the bank in this scenario. So that means that the borrower is making payments to you, just like, we've probably all experienced making payments to the bank, credit card, mortgage, auto loans, etc. So that's nice, right? Because when you think about it, when's the last time you called your bank when something broke at your house, right? Probably never, right? So you're not going to be hearing from tenants. You're not going to be dealing with the toilets. You're not going to be dealing with turnover and cleaning out a bunch of trash when they leave. So to me, that provides a lot of benefit, that I don't have to worry about some of those headaches that bother me the most about rental properties. I also like that it's a pretty stable and consistent asset. You can kind of think of it like a replacement for fixed income assets, just typically at a better rate of return, which is nice. So once I really started to get some training on this, really started to understand the asset class a little bit, I did dive in and I bought a couple of smaller notes in my self-directed Roth IRA account, just to kind of get some experience and see how that would go. And that kind of leveraged me into purchasing a couple more partial notes, meaning I purchased a certain number of payments, not an entire note, from another investor. And so far I've done all performing notes, and eventually, I might expand further into non-performing notes as I gain more experience. But for now, as I've been going through this learning process, getting to know this asset class and kind of feeling what fits into my kind of investment buy box, that's been my approach so far. And there's been a lot of good learning opportunities along the way. Some things I'll probably be discussing in other videos that I'll be putting out. But what I really love about it is that while there is some time that you put in up front, once you actually have the asset on your books, there's usually not that much time commitment involved. You're usually going to have a third-party servicer managing the day-to-day operations of the note, right? Think about, if you've had an online payment portal where you've had to go in and pay one of your loans, that's typically going to be a servicer, right? So they're dealing with the accounting of, how much principal did you pay, how much interest, etc. So that takes a lot of that off of your plate as the investor. And the nice thing about this is that you can kind of grow this over time and really kind of start to build up some portfolio income that can start to replace some of your active income and help you buy back some of your time. I'd say that's a big part of my why is that, being a doctor has a whole lot of benefits to it, but there are a lot of challenges. It's easy to get overwhelmed in the current environment where it seems like reimbursement rates are always going down. Clinical hour demands seem to always be going up. So it's nice to be able to buy yourself some flexibility. And I think notes are a really good way to do that. So that's one of my biggest whys. And I think that notes can be a great strategy for doctors who are at the same stage of their career as me. But I think where it really shines is for people who are getting closer to retirement age, right? Where traditionally you might be starting to shift that portfolio from stocks to more bonds, maybe annuities, maybe some other fixed income assets. And I think that notes can just be a fantastic source of income for people who are in that category. And definitely that's going to take a lot of that volatility concern, some of that market risk off the table, which I think is just a really awesome use case for this asset class. So for me, I've really enjoyed learning about this asset class and definitely all the deep dives I've taken into various investment strategies over the last few years. I think financial literacy and learning is extremely important for all physicians. It's something that's really neglected in our training because we spend so many years focused on just becoming the best clinicians that we can be and really taking care of patients in the best and most high quality manner that we can. So I do think that this is a strategy, note investing, that can fit into the portfolios of a lot of physicians. That being said, I know it's not for everyone. And part of what I want to do is to help explore that and see if it is a right fit and kind of take a deeper dive as a community and learn more about this exciting opportunity together. So realistically, this isn't necessarily about leaving medicine, but it's really about giving us options and flexibility to practice on our own terms. So if you're interested in learning more about how note investing might work for you, feel free to check out a guide that I'm putting together to kind of talk you through the basics of note investing. If you're interested in learning more about notes and how they might work for you and your portfolio, take a look at the link I'll have down below for my due diligence framework.